Hello, everyone.
Hello, everyone.
Hello.
Today we are going to be presenting an analysis of Microsoft. So we'll be examining Microsoft Corporation as it is one of the world's leading global technology companies, and the analysis is going to be focused on the business structure of the company, as well as what segments it operates in. Well, the company operates in many segments. However, we're only going to be focusing on few of them, as it would be too much to cover on that every segment. And the aim of the presentation and the document is to examine and understand how Microsoft is able to sustainably invest in its growth, fund new endeavors, new businesses, acquire, merge while maintaining stability and profitability for themselves, so for shareholders, and overall how it's able to maintain such a favorable position and grow. So now we proceed with the executive summary of our document. So firstly, the analysis will highlight the financial performance the of the company using its own annual reports, which will be focused on 20 year end 2024 and year end 2023 specifically. So it will the document will also, and the presentation will also evaluate how Microsoft is able to grow so sustainably. What do we mean about sustainable growth and how it's able to do so? So, as well as highlight the strength of the company through its strong revenue, diverse revenue streams, how its profitability on both gross and net profits, and the different cash flows and strong cash flow of the company, which, as we'll see in the future, allows the company to stay so competitive and fund their growth. It will be concluded by a hypothetical situation, an overall wrap up of the whole document, as well as the showcase of its ability to maintain low debt and stay so liquid. Okay, so to introduce the company, of course, it's one of the most widely renowned companies in technological, not only technological, but specifically in technological segment. It was founded in 1972 in New Mexico, Albuquerque, New Mexico, but is currently headquartered in Redmond, Washington. It was founded by Bill Gates and Paul Allen, and as I said, it's one of the leading technological companies in the world. So, as I said, Microsoft operates over various segments, but for the simplicity's sake and for the analysis specifically, will be highlighted its operations in software, cloud computing, cloud services, artificial intelligence, which is the most recent addition to the revenue streams, operating systems, such as most notably Windows, of course, and the gaming industry, with the main highlight being its console Xbox. So, yeah, the business itself is divided into three main factors, which is productivity, cloud, yeah, most notably cloud, and AI, as well as personal computing. So, as I said, Microsoft operates across different fields: software, cloud, AI, and gaming. But nowadays, cloud computing, cloud services, it has been driving Microsoft's growth the most recently. Yeah, and notably, since Microsoft does produce products, but it's service-based company, so it allows Microsoft to sustain margins, favorable margins, and it allows Microsoft to stay competitive and maintain minimal inventory. To briefly look at finances, this is just an important part. Later, more finances will be overviewed in depth. So for 2024, revenue was 245.1 billion United States dollars, which is a big jump, nearly 16% from the year 2023, where it was 211.9 million billion dollars. Excuse me. And of course, as I said, the key growth drivers and key growth segments are cloud computing, like Azure, and strong demand for Microsoft applications, Word, Excel, which is known as simply Microsoft 365 programs. So the financial strategy of the company, based on the annual reports, is efficient liquidity, efficient capital management, and in-house financing of their growth. So they choose to not have as much debt as other companies, but they choose to grow in-house. Their cash positions reflect their strength and their strong revenue and cash flow, and as but and because of that, the company is able to achieve financial stability and supply the growth. More on that after my colleagues proceed. Thank you.
Hello everyone, and today I will cover Microsoft's capital structure and financial strategy. So Microsoft maintains a conservative capital structure, relying primarily on equity financing with strategic and limited use of debt. Over the past 5 years, the company's debt to equity ratio has steadily declined from 0.62 in 2020 to 0.26 in 2025, reflecting reduced reliance on debt. So, this conservative approach allows Microsoft to remain financially flexible during periods of economic uncertainty while still being able to invest heavily in growth initiatives such as cloud infrastructure and AI. So, maintaining low leverage also reduces risks for shareholders and supports long term sustainability. So moving on to the next slide, which is stock prices repercussions. So over the last 5 years, Microsoft's stock price has been influenced by both external economic factors and internal corporate factions. Macroeconomic events like inflation and rising rates put pressure on valuation multiples as investors became more cautious about paying high premiums for growth. So, however, Microsoft's strong performance in Azure and cloud services, combined with strategic share repurchase programs, helped maintain investor confidence. Share buybacks supported earnings per share, while long-term investments such as data center expansions and acquisition, they reinforced the company's market value. So overall, despite market volatility, Microsoft stock has shown resilience and reflecting investors' trust in companies' growth and strategy in financial management. So now let's look at the capital budgeting key decision. So next, let's look into the year 2025. Microsoft plans to allocate approximately 80 billion to expand data centers and cloud infrastructure with a focus on AI-powered workloads. This includes building hyperscale data centers worldwide and acquiring CPU and GPU capacity for its in-house silicon. In addition to infrastructure, Microsoft completed the acquisition of Blizzard for 74.5 billion in 2023. This strategic move strengthened Microsoft's gaming segments and diversifies its revenue streams across mobile and consoles, PC, and cloud gaming markets. So let's move on to the next slide. So the capital decision to invest 75 billion had a significant long-term impact. Infrastructure investment ensured that Microsoft remained competitive in AI and cloud markets, enabling them to deliver and differentiated products compared to competitors like Amazon and Google. So the acquisition of Blizzard accelerates revenue opportunities in gaming and interactive entertainment while leveraging Microsoft's intellectual property for long-term profits. By combining short-term operational planning with long-term strategic investments, Microsoft wants to ensure both scalability and resilience, maintaining its position as a technology leader in nowadays business. So, in Microsoft dividend overview, turning to dividends, Microsoft has a consistent and progressive dividend policy, reflecting a strong commitment to returning capital to shareholders while maintaining financial strength for growth expansion. So, quarterly dividends have steadily increased, demonstrating confidence in future earnings. Also, dividends are supported by strong free cash flow and robust business model. The company prioritizes reinvestment for growth, but balances with rewarding shareholders, ensuring long-term financial sustainability. Also, in the last 3 years, the dividend payment, so-called EPS, uh, since 2023 to 2025, Microsoft increased its dividends per share from $2.72 to 3.23. So simultaneously, diluted earning per share rose from 9.6 billion to 13.6 billion over the same period. So this alignment between EPS and dividend growth ensures that payouts are backed by real earnings rather than debt or short-term financing, right? That weakens the position of Microsoft. This approach demonstrates the company's financial scalability commitment to shareholders and their value. Let's move on to the next slide where we're going to cover the COVID-19 impact on Microsoft. So dividend yield and COVID impact on Microsoft has remained modest, typically below 1%, which is common for high growth technology firms. This reflects a focus on reinvesting earnings into innovation and expansion rather than high dividend payouts. So importantly, during COVID-19, Microsoft maintained its dividend payments, demonstrating financial resilience. The company paid 2.4 $2.4 per share and continued increasing dividends in subsequent years. So reflecting confidence in earnings and commitment to shareholders even in the period of global economic stress. So in the conclusion, in summary, for Microsoft, conservative capital structure, strategic capital budgeting, ensures future competitiveness, while progressive dividend policy and share purchases support shareholder value. And overall, these financial strategies make Microsoft a resilient and promising company to look forward and capable of sustaining growth and creating value over long term. So thank you for having my attention, and we're gonna move to my partner, Kassan. He's gonna cover all the other slides.
Hello, I'll be covering the critical thinking section of our analysis, where I'll act as the Chief Financial Officer of Microsoft, and I'll present our overall conclusion and investment recommendation. I'll I'll focus on Microsoft's potential expansion into Turkey, the key risks involved, how those risks could be managed, and how international capital budgeting should be adjusted. I will then conclude by explaining whether we recommend investing in Microsoft stock based on our overall findings. So, in this hypothetical scenario, I am acting as Microsoft's CFO and evaluating an expansion into Turkey. Since Microsoft already operates in Turkey, this is not a market entry, but rather an expansion, possibly including a larger regional presence, such as EMEA headquarters. As CFO, my responsibilities is to assess whether the expansion will make financial sense and how risky it is, and how those risks could be managed to protect shareholder value. Let's move to the risks in Turkey. So, the first major risk I would consider is inflation. Turkey's inflation rate remains high compared to developed markets. Although forecasts suggest that the inflation may fall into the 20% range by early 2026, this is still comparably high to international standards. High inflation increases operating costs, such as wages, rent, utilities, and supplier prices. If costs rise faster than operating revenue, if if costs rise faster than revenues, then profit margins can be squeezed, which directly affects cash flow and projected revenue. The second major risk is exchange rate volatility. The Turkish lira has depreciated against major currencies such as the US dollar. This creates uncertainty when revenues earned in Turkey are converted into Microsoft's reporting currency. Currency movements can reduce the value of future cash flows and make financial planning more difficult. Another important factor is credit risk. Credit rating agencies currently classify Turkey as a speculative grade. This means borrowing costs tend to be higher and access to cheap local financing may be more limited. For a large investment project, this increases the cost of capital and adds financial risk. Together, exchange rate risk, inflation, and credit risk represent the main country-specific challenges Microsoft would face when expanding into Turkey. Now let's move on to risk mitigation strategies. Even though these risks are significant, they can be managed. To reduce currency risk, I would use financial contracts that lock exchange rates. This helps to protect expected cash flows from sudden currency movements and improves predictability. I would also use a mix of local currency and foreign currency borrowing. This helps to match debt payments with revenue generated, reducing the impact of exchange rate changes on financing costs. To address regulatory uncertainty, political risk insurance could be used. This would protect the company in a case of unexpected regulatory changes that or government actions that negatively affect the company's operations. Finally, I would strengthen Microsoft's local compliance and monitoring teams. This will allow the company to closely monitor and track policy developments and respond quickly to any changes. The goal of this strategy is not to eliminate risk totally, but rather to reduce it to an acceptable amount. Now, next, let's move to international capital budgeting consideration. When evaluating a potential EMEA headquarter expansion into Turkey, I would also adjust the capital budgeting process. First, I would use a higher discount rate when calculating net present value and internal rate of returns. This reflects the higher inflation and currency risks compared to investments in developed countries or developed markets. Second, I would apply stress testing to projected cash flows. This allows us to see if the if the project performs under negative scenarios such as sharp depreciation of the Turkish lira. Finally, I would make sure that the cash flow forecast includes local conditions such as tax incentives, labor costs, infrastructure quality, and legal requirements. These factors can significantly affect both costs and timelines of overseas projects. By adjusting capital budgeting in this way, Microsoft can make realistic conservative investment decisions. Next, let's move to the key takeaways from the critical thinking section. To summarize this section, Turkey offers growth opportunities, but it also has high financial risks compared to developed markets. However, with proper risk management, careful financial choices, and conservative capital budgeting, and expansion can still be financially viable. The key is the key is pricing risk correctly and ensuring expected returns compensate for that risk. Let's move to the conclusion now. Moving to our conclusion, based on the analysis presented in this report, Microsoft is in strong financial position. The company has achieved steady revenue growth, rising profitability, and strong cash flows, driven mainly by its cloud, AI, and subscription based services. Key financial indicators such as operating income, net income, and earnings per share show consistent improvement, which reflects an efficient and scalable business model. Microsoft also benefits from conservative capital structure. The company relies relatively little on debt, which increases financial stability and allows flexibility during periods of uncertainty. This particularly is important in volatile global conditions. At the same time, Microsoft continues to invest heavily in long-term growth through capital expenditure and strategic acquisitions, especially in cloud infrastructure and artificial intelligence. These investments support future competitiveness and revenue growth. Finally, I want to talk about our um, our investment recommendation. So, from a corporate finance perspective, management's decisions appears to be creating value for shareholders. Dividends have increased steadily and are supported by strong earnings, while share repurchase programs provide additional returns to investors. This growth shows a balance between approach. This shows a balance between rewarding shareholders today and investing for future growth. Based on our findings and publicly available information, our group recommends investing in Microsoft stock. This recommendation is supported by Microsoft's strong financial performance, effective risk management, and conservative financing strategy, and a solid long-term growth prospect. Thank you very much for your time.